Hi, everyone, and thank you so much for joining us today. Over the next 45 minutes or so, we're going to be hearing from the incredible Simon Ree. But before we do, and before I introduce him, I just got to explain that we're facing some technical issues today, unfortunately, so we won't actually be able to see Simon's face while he's speaking. However, he's still going to be there speaking to us, and it'll still be engaging, so I hope you enjoy. So without further ado, it's an absolute honor to be able to welcome Simon Ree to speak today. I don't want to give away too much about his story, his background, career, and his book. But Simon's had over 25 years experience working in the financial sector for some of the largest companies in the world, such as Goldman Sachs, Credit Suisse, and Citibank. And he's worked as an active trader, an investor, and financial markets professional. He recently released his book, The Tao of Trading, which has already become a #1 bestseller in 5 different categories on Amazon. So Simon, thank you so much for joining us today. Why don't you start by telling us a little bit about yourself and your career so far? What roles and companies have you worked with, and where's this taking you to around the world?
Yeah, I had some technical issues earlier, so I wasn't able to join with a webcam, unfortunately. But as long as you can hear me, you're not missing much, believe me. Yeah, so where have I come from? So I grew up in Perth, in Western Australia, and studied an economics degree at the University of Western Australia. And I was attracted to that because ever since I was a teenager, I'd always been fascinated by stocks and the stock market. I used to love looking up the share price tables at the back of the newspaper. And I just always found it very, very dynamic and stimulating and interesting. So studied economics and finance, and my first job outside of university was as a futures broker. And working in futures really kind of piqued my interest in derivatives. And that's when I started to learn about futures, but not just futures, options and options on futures. And I found that side of things really fascinating as well. But what I realized was I didn't find, wheat and corn and sugar anywhere near as exciting or interesting as companies and stocks.
Right.
And so eventually, a few years later, I joined Goldman in the mid-90s and formed a specialty in equity derivatives. And that really combined, I guess, my love of stocks and the dynamism of companies and announcements and industry and businesses with sort of my newer found interest in options and derivatives. And so I formed a business really around those two interests, which became my two key kind of skill sets really. And then in 2004, I moved to Sydney and was asked to found and head up the markets desk for Goldman Sachs in Australia and New Zealand, which involved me, doing a lot of travel and a lot of interfacing with the respective markets desks in Hong Kong, London, and New York. And we built that up into a business, pretty sizable business in a fairly short space of time. Went through the global financial crisis, which was a huge learning experience for everyone in the industry at the time. And then in 2010, I moved to Singapore to join Citibank, where in that role I was working with really, I guess, Asian tycoons and billionaire family offices throughout Asia and Australia, and working with them on their investment strategies. And throughout my career, I've had the opportunity to work, both on the market side and sort of the public-facing side of the industry. I've met and befriended some of the best proprietary traders in the business and had an opportunity to learn from them. And I've met some of the wealthiest and most successful individuals and families across Asia and Australia. So it's been a really stimulating career. But where I ended up was I'd realized that I'd spent the better part of my life helping people who, by any definition, were already wealthy beyond the wildest dreams of almost anybody. And I thought, I've accumulated a useful skill set here, and I'd really like to help people who kind of really need it. Middle class people who are kind of struggling to get by. And the fact is, if you're not already seriously wealthy, a lot of the investment products that you have access to and that are offered to you are just not that great. They tend to be expensive, and they tend to, frankly, not really deliver the goods. And so I thought, well, I've got a skill set here that a lot of people could really put to serious use. And I built a company in 2017 that set about providing trading education to people who wanted to learn how to trade for themselves. I moved back to Singapore in 2019 and started writing my book, The Tao of Trading, which I've also kind of branded my business with the same name. And here I am today. Yeah, my mission is to help people who want to really accelerate their wealth creation potential beyond, what 10% per year in the stock market might deliver you over the long term.
It was great to hear that you've had a really interesting career. You've traveled to different places to work, and obviously you left the corporate world to set up your own brand. Do you have that? Obviously, it is fantastic to hear kind of what's inspired you to do this, but do you have any regrets about the decision?
No, and I say that with a slight hesitation, because I guess the first 6 to 12 months was a big change. All right, the one thing you miss are colleagues.
Right.
Having a chat on a Monday morning around the water cooler with your mates in the office, and just you miss out on a lot of that kind of stimulating conversation you have with great colleagues who are also smart, driven, well-educated people. So
Yeah,
you do miss that. So one thing you have to do when you run your own business is make sure that you are you socialize yourself, and it's sort of, it doesn't happen by default. It becomes much more of an effort, and so that was sort of one adjustment, and probably the main one. But when I look at the amount of freedom that I've got now, the idea of having to ask somebody else whether I'm allowed to take time off for a holiday just kind of seems a bit strange now.
yeah, I'm sure.
Yeah.
Let's talk about your book. So your book, The Tao of Trading, was only released about a month ago. I think I'm right in saying.
Yeah, probably, almost exactly a month ago, actually.
Okay, but since then it's been hugely successful. On a personal note, I read it cover to cover almost within a day, and it's taught me so much already about options trading. I have it right here, in fact, obviously,
Oh,
and
fantastic! Good on you.
I highly recommend it to you all to read. Can you maybe explain the inspiration for the book itself and share a couple of key ideas from it with us all?
Yeah, sure. So I think, the inspiration. Well, I'll talk about the inspiration for the title first. In
Okay.
addition to being a trader, I'm also a Jeet Kune Do instructor. And one of my favorite books was The Tao of Jeet Kune Do by Bruce Lee. And that was the inspiration for the title. And the Tao simply means the way. And my mission with writing this book was to do something a little bit different. I mean, there are no shortage of trading books out there. Okay, books on trading, books on option trading. I've read quite a few of them. But generally they're pretty hard to get through. They tend to be dry. They tend to be quite difficult and complex, and frankly quite boring. A lot of them read like textbooks.
Yeah.
So I wanted to read a book. I wanted to write a book that was engaging and simple, so people could pick it up, assimilate it, and get through it. And I think he said he read it in a weekend, and I've it's 340 pages. But I've been surprised just how many people have given me the same feedback. They read the whole thing in a weekend. I was like, wow, that's surprising. But
Yeah.
sort of an indication that I think I've succeeded in my mission in writing a book that's sort of simple and engaging, and can keep the reader going. In terms of key ideas, I mean, obviously I'm a big believer in options, which is something that some people kind of get scared away from. They think they're too complex, or they need a PhD in maths to understand them. And hopefully I've, through this book, dispelled a lot of those myths.
Yeah.
Yes, options are a little bit more complex than stocks, but they're not mind-blowingly complex at all. I've taught an 80-year-old lady how to trade options, and this was a lady who, when she started working with me, didn't even know how to open a second browser tab. All right, so it is teachable, and that was one thing that I wanted to do with my book, is just teach people. Options are nothing to be scared of, and really anyone can do it if they want to put in the effort. I guess the second key message from the book is the power of trend following. I'm a big believer in trend following. I think it's the most intuitive way to trade. It's the simplest way to trade, and it's a way that really gives you an edge. And just encouraging people to, forget what you're hearing on the news, forget what you read in the newspaper, forget what you hear the talking heads say on the TV, or even on LinkedIn and Twitter,
Yeah.
and really become responsible for making your own decisions. And that isn't hard to do either, when you know how to follow trends and read trends.
Very briefly, for some of us here that might not know what options are, would you be able to just give a quick explanation as to what they are, how they work, just
Yeah,
so
sure.
we're on the same page?
So just to just to, I guess, steal a line from my book, one of the most popular options to buy are call options. So they enable you to make money when a stock price rises. And the analogy I draw is a call option. It's like the Airbnb of the finance industry. And so we're not looking to make money in stocks by buying them and owning them. We're literally looking to rent them for a short period of time. And that's what a call option allows you to do. It gives you really most of the benefits of owning the underlying stock, but with only a fraction of the capital outlay. Now, the downside is you might only have control of that stock for 4 weeks or 8 weeks. It'll be a finite period. But you know, instead of having to fork out you know, hundreds of thousands of dollars to buy 100 Amazon shares, you might only have to spend a couple of $1,000s. And so the analogy is instead of having to buy that beautiful French chateau in the Loire Valley, you can just rent one for a month, and it costs you much less, but you still get the benefits of ownership, and that's really what options give you.
Fantastic. I think one of the great things that I found personally with your book is, you know, how simple you make everything sound, and it is really easy for us as students to be able to kind of pick it up and understand what you're talking about without any prior experience of options trading. So that's really fantastic. One of the key messages in your book is the importance of emotional control in trading.
Mm-hmm.
Is this something that you've learned from Jeet Kune Do, and are there any other lessons that you've learned from the martial art that can be applied to trading?
There's a huge crossover, and that's a great question actually, David, because there is a huge crossover there. I mean, anyone who's practiced martial arts and has been involved in sparring, you'll realize that you know, the first few times you get involved in sparring, you know, you can feel a bit nervous, you can feel a bit scared, and when you start getting hit, you can have an emotional reaction. You know, your game plan gets thrown out the window, and all you want to do is hit the other person as hard as you can. And you know, there's a famous Mike Tyson quote: "Everybody has a plan until he gets punched in the mouth," and that applies, all right? Because as soon as you've taken a few hits, your emotional brain takes over. You know, you sort of your executive brain, the prefrontal cortex, cedes control to the emotional brain. And if you're aware of this through training in martial arts, you become much more adept at keeping that executive brain running the show. So when you're trading, you know, you obviously you're not receiving punches and kicks, but it can still feel like a pretty hostile environment at times. And you can still feel fear and uncertainty and indecision. And the key is to, look, we're all human. We're always going to feel those emotions, but the mastery comes in when you recognize those emotions, you're honest with yourself about them, and you stop letting the emotions make the decisions or control your actions. And this carries over into all areas of life. I mean, if you choose the unemotional response to a situation, watch how simpler your life becomes. But yeah,
How
that's very, very true in trading.
how did you get into martial arts in the first place? You know, from a career. I know, as you said, there's obvious similarities, but from a career in trading, investing, how did that happen?
Oh, well, I mean, I you know, my parents sent me off to judo classes when I was 10.
Right.
You know, wasn't really something that I kind of opted into. My parents just kind of threw me in there, and I enjoyed it. And you know, I'd never been a particularly sporty kid, but for some reason, I just kind of took to martial arts. It was something I had a bit of a natural kind of aptitude for. And so, you know, I sort of stuck with it. I went from judo to karate, did ninjutsu for a few years, studied some Muay Thai. I did a kung fu retreat at the Shaolin Monastery back in 2013 in China, and then that was about the same time as I discovered Jeet Kune Do when I was in Singapore, and I just finally thought, this is a martial art that really suits me, and yeah, worked my way through that and became an instructor in 2018.
As a professional qualified instructor.
That's right, yeah.
Well, okay, well. Back to the book. Writing a book, you know, certainly isn't for everyone, and with it presumably becomes a significant amount of time, effort, dedication, and stress. So for you, what was the biggest challenge that you faced in writing your book?
I've always been a, you know, get shit done kind of guy. But in writing the book, I discovered my inner procrastinator. I can honestly say my sock drawer was never better organized than while I was writing the book. And it's quite funny that there's this thing that David Pressfield talks about in a quite a well-known book called the War of Art, called the Resistance. And it's, when something's very important to you, there is this apprehension about getting it done. And even though I actually quite enjoyed the process of writing, there was always this kind of, oh, I've got to sit down and write now. And it's just a case of setting targets and knuckling down and doing it. And there was one tip I read, I can't remember who said this. It might have even been Ernest Hemingway. He said, when you're writing, never finish a paragraph, never finish a chapter, never finish a paragraph, never even finish a sentence. So when you've finished your writing for the day, finish mid-sentence. And then when you pick it up again tomorrow, it's that much easier to get back in the flow. Whereas if you finish at the end of a chapter, you're kind of recreating from scratch again, and it can take you a while to kind of get in the flow. Right. So that's a little tip I picked up for any aspiring authors in the audience.
It's really fascinating. Talking about your career, having worked in Singapore for several years, you must have developed a feeling for what the place is like and where it's heading in the next few years. From a UK perspective, Singapore seems to be, a fast developing region with plenty of potential. So for the students among us, which I assume is most people within this Zoom call at the moment, what are the working opportunities like there? And would you encourage students to go abroad to work there or even study there, I guess?
Yeah, great question. I think very short term, it's probably looking a little bit tough. I mean, Singapore really got its ass kicked in terms of its economy during lockdown. Right. GDP declined, I think 42% annualized. So it's kind of had a pretty severe blow. But longer term, Singapore, I think, is going to be a really popular destination for private capital, because traditionally you've had kind of two gateways to Asia, Singapore and Hong Kong. And I think Hong Kong is kind of off the radar now for global capital looking to find a home in Asia. So Singapore really becomes that kind of gateway to Asia. And it's kind of becoming, well, it's already become really the sort of the Switzerland of Asia, if you like. Right. It's a massive destination for private capital, private banking. And I think from a private banking, private capital, private equity sort of perspective, Singapore's future looks really, really good as soon as we get over this kind of lockdown related slump.
It's just interesting because, in the UK here, we're so used to seeing foreign students coming to work or study here. But I feel that we're so close-minded and unwilling to travel abroad to work ourselves. So it's really interesting to hear that, that you do believe that Singapore could be a great hub in the future. And, speaking of advice, what's the best advice that you've received throughout your career? And what advice can you give to the students here today who are considering a career in finance, investing, or trading?
I think the best advice I've ever received was just always do your best. Whether people are watching or not, a reputation is something you build up over years and years and years, and you always want to be in a situation where, anybody who knows you, anybody who worked above you, below you, with you would speak well of you. Because if you can get yourself in that sort of a situation, doors open and really life just becomes a whole lot easier and more fun.
Well, look, Simon, thank you so much for answering those questions from me. Now, for the second half, for the last few minutes, if it's okay with you, I'm going to read out some of the questions that we've had so far sent in.
Absolutely.
Our audience. And, everyone feel free just to keep sending questions. We've already had quite a lot, which is fantastic. So to start, how has your options trading strategy been affected by COVID-19 and market volatility?
Well, it's been a great year. I mean, I've had a really great year for trading, and I my trades tend to be fairly short term. My average holding period. Well, let's pre-2020, my average holding period was probably anywhere from a week to 4 weeks. In 2020, it's probably gone down from anything from 2 to 3 days to 2 to 3 weeks. So holding periods have become shorter because there's been more volatility. But the beauty of options trading is you can make money in up markets and down markets. And March was actually a record month for me, and bear markets can be really fun to trade when you know what you're doing. So my trading strategies are very adaptable, and the title of the book is how to build abundant wealth in any market condition. That's kind of the whole point. I think we probably all know there's probably another fall looming in the future at some point, and I want people to be prepared for that and to make money from it rather than be afraid of it.
Really fascinating. As a trader, you're working much more on the technical side as opposed to the fundamental side.
Yes.
So what led you to that decision? And this is a two-part question that we've had. How do you think the retail investor's success rates vary between technical and fundamental investment strategies?
Okay, so what really kind of led me to I guess a massive rethink. Okay, well let me give you some background. When I first started in the workforce at the futures broking firm, my boss John, he was a big technical analyst. He was a big Elliott wave guy, which isn't a methodology I use. I just find it too hard. I just don't understand it. But it did pique my interest in technical analysis. So I've always kind of had an interest in it. But in 2008, all right, which was the global financial crisis, I was heavily invested. I was working for Goldman at the time, and I was listening to guys who were supposedly the smartest guys in the room, strategists, stock analysts, and the number of times I heard from them, buy the dip, this company's undervalued, this stock is dirt cheap, buy the dip. And I thought, well, these guys are the best. They know what they're talking about. And as a result of that, I lost a life-changing amount of money that year. And that's when I thought, right, I've just got to get serious about this. And, I started having drinks after work or having lunches with some of the proprietary traders. And this was back in 2008, 2009. Goldman was at the height of its game in terms of prop trading.
Yeah.
I said, oh, well, analyst says it's cheap. Why are you shorting the stock? Oh, don't be an idiot. Why are you listening to the analysts? They don't know what they're talking about. No, you got to follow price. Ah, okay, yeah, I remember that technical analysis. So that's when I really kind of started dusting off all my old technical analysis books.
Sure.
And, from that point on, I was spending 12 hours a day in front of a Bloomberg screen, and sort of any chance I got, I'd be testing systems. And, I guess I've been preparing for what I'm doing right now, really, for the last 12 years at least.
Right. Okay.
In terms of success rates, look, I think fundamentals can be helpful if you're a genuine investor and you're looking at a very long term horizon. And by long term, I'm sort of talking 10 years plus. But very few people meet that description, because what happens is people say, "Oh, I'm a long term investor. I'm in it for the long term," and then Nasdaq futures are down 2.5%, and they're like, "What the hell? What's going on?" They're scared. They're uncertain. And what happens to most humans? It's a human trait. Is that they start off as a long-term investor, market drops 30%, and all of a sudden they're like, "No, I can't stand this pain anymore. Get me out." And what happens is most people sell at the worst possible time. You always find that market volume peaks right near the bottom of the market, and that's when stocks are being delivered from weak hands to strong hands, and that's unfortunately what happens with a lot of retail investors. So the job of an advisor is probably more, psychological counselor than investment guru. To be honest with you, you're just trying to stop people from making dumb decisions.
Right. Okay.
But if you've got a time horizon of anything under 12 months, fundamentals really are not relevant.
Great. We've had one question about options, which is what actually happens when an option expires for the holder if they fail to sell?
Well, there's two things that can happen. If the option is in the money, your broker will usually auto-exercise the option for you, and you end up with the shares, or you end up selling the shares in the case of a put option. Either that, or it expires worthless. Okay, an option is a wasting asset, and if an option isn't in the money at expiration, it just disappears. It's gone. Its value will track towards zero. So trading options is, yeah, there's a very, very important onus on getting your timing right. You need to make sure that if you're doing a directional trade, you get a strong directional move within sort of the time frame that you need. So that there is some skill and there is some learning involved, but it's eminently teachable. It's nowhere near as hard as Wall Street would have you believe.
Right. And do you think that, one's trading skills and development relies on physical practice, or can it be developed just through reading?
No, you learn by doing. I mean, you can read countless books on how to swim, but you're not going to learn until you get in the pool and start doing some strokes. It's the same with golf, right? You can read countless books on golf, and whilst they can be helpful and they can improve your game, you've got to swing that club hundreds of thousands of times to get any good at it. And trading is the same. It's one of those experiential skills you learn by doing. But to make that learning process a lot quicker and a lot cheaper, it's worth getting a proper education. Because if you're just sort of flying by the seat of your pants, you could end up blowing up your account before you've even sort of picked up the skills. And then the problem is if you're trying to learn it by yourself, you don't even know, you don't know what you don't know. And so you don't even really know what lessons you should be trying to acquire. So I think if trading is appealing to you, get some good education. It's really important. And can shave years and years off your learning curve.
As a student, what ways do you recommend to go about doing that? Obviously, you have your website where I believe you teach courses for.
Yep.
But are there any other ways that you suggest to go about learning and developing in trading?
Well, I think reading books is great. I mean, obviously, I think my book is probably one of the best ones out there for people who want to get started. I think it's £7.40 or something on Amazon. Reminiscences of a Stock Operator is one of my favorite books. I think everybody should read that. Trading in the Zone by Mark Douglas is just the Bible on the emotional aspect and risk management aspect of trading. That's another wonderful book. If you really want to kind of get serious about it and really accelerate your learning curve, an online course like mine could be really, really good as well.
Okay, that's great. As I said, most of us here today are students, and most of us, I assume, probably have a low student budget. So what are your top tips to start making money, whether investing or trading, as a student? Do you need a high level of starting capital and experience to be able to start making good returns in options trading, for example?
Don't start without a proper education, and a proper education isn't watching, a half-hour YouTube video. I mean, honestly, obviously I'm going to plug my book, right? But I think it's a very low-cost, low-risk way of finding out more about trading if you're interested in it. It's pretty cheap. I make no money out of selling books. All right, that's more of a public service.
Okay.
But buy my book, or there's a great book by Andrew Aziz, how to day trade for a living. That's another great book. But get some grounding in how markets move, what a trend is, how to identify a trend. If you want to trade options, which I think everybody should, you need to have an understanding of that as well. One of the good things about options is you don't need a huge amount of starting capital. I would think a couple of £1,000 is absolutely fine to get started.
Okay, cool. One of the things that you discuss principally in your book, I think towards the beginning of it, is the difference between trading and investing. I think there's a common misconception that either they're two of the same, or that trading's almost looked down upon compared to investing. Would you just talk about the difference between the two for us?
Yeah, sure. Well, really and truly, there's this perception that a trader is in it for the short term, and they're kind of speculating on price movements, and investors are in it for the long term, and it's a function of time is what most people assume the difference is. I disagree with that. I think the difference between a trader and an investor, it's not a function of time, it's a function of purpose. So an investor is somebody who understands the cash flows of a business, and they're buying equity in a business to participate in the growth in those cash flows and the growth in value over the very long term, and that they may hold on to that indefinitely. A trader is somebody who buys a financial asset with the expectation that they'll be able to sell that asset at a higher price at some point in the future. Whether that's in a week or a month or 6 months or 5 years, if you're buying assets with the intention of selling them at a higher price, really and truly you fit the definition of a trader. And the problem is people think that they're investors because, oh, I'm going to hold this for a year. But because they don't have a proper trading plan, they get into trouble when things happen that were not expected. People, nobody buys a stock or an investment expecting it to go down, all right? Or you wouldn't buy it.
No.
But the fact is, markets are fluid, markets are unpredictable, and anything can happen. And it's about having that plan of, what do I do if something happens that's unexpected or untoward? And that's really where most investors fail. And that's where most traders will shine, because traders are generally taught right from the start, you've got to have a trading plan. You've got to learn how to manage risk, which is something most investors, or people who call themselves investors, do a fairly poor job of.
Sure. Okay. And look, when it comes to finding an opportunity for a trading opportunity in options, we've had one question, which is, what role does fundamental analysis play, if any, of a company? When you trade or find a trading opportunity, are you looking at the underlying performance of the company, or just its share price movement, kind of entry and exit points?
Yeah, fundamentals play zero role, absolutely zero. The less I think I know about the fundamentals of a company, honestly, the better off I am. Because if you've got a little bit of an idea about the fundamentals, little biases are going to creep in. And I had this conversation with one of my students last week, and we were analyzing his trading results for the year. And he comes from a fundamental background, right? He used to be an analyst at an investment bank.
Okay.
And he's a German fellow. He's very, very, very thorough. And he said, I always think that I should be looking at, the fundamentals and looking at the valuations before I make a trading decision. And I said to him, well, let's review your trades for the year. And we did that. And he'd probably made 4 to 5 times more money in one stock in particular than any other stock. And that stock was Shopify. And, he was shockified when he saw that they were trading on a PE of 600.
Yeah.
So a lot of people would think that a PE of 600 means the stock's expensive and you should short it and it can't go up anymore. But guess what? It's been phenomenal. Tesla is another stock that people love to hate, but it's just been a phenomenal performer. And if you're trading options in stocks like these, you can just make money hand over fist.
Sure. Okay, I think we have time for just 2 or 3 more questions, if that's all right with you. Yeah. Simon, can you still hear me?
Yes, I can.
Okay, great. One question we've had is, if you ignore your trading rules and exit a great trade off a hunch, how can you discipline yourself?
Well, I've just learned not to do that. One of my first kind of rules that I used to have taped against my screen was, if there is no setup, there is no trade, right? Which means I'm not ever going to buy something because I think it's going up, or because my brother-in-law said it looks great. I've got to follow my own setups. If there is no setup, there is no trade. And then it's just about being very disciplined on exit rules. But the more planning you do before the trade, the easier it all becomes. So you plan your trade, you plan your entry, you plan your exit, you plan your stop loss. And then it's just a case of, well, what does my plan say I have to do? And that way, if, fire and brimstone are raining down on the markets, you don't need to feel any fear or indecision, because you just follow your plan. And you've managed your risk in such a way that if you do take a loss on that trade, it's not going to hurt you particularly.
Okay.
So just having that plan in place removes any kind of fear or adverse emotion or indecision from your trading. It's really important.
So just plan beforehand.
Yeah, absolutely. Yeah, and follow the plan.
All right. I'm conscious of time and I don't want to keep you all for too long. So I think for the final question, Simon, one of your book chapter titles has caught the eyes of several of our audience members today. This is a question I've been sent several times in the last few minutes. So why is trading like sex?
Well, trading is like sex, and this gets back to, kind of touches on what we were just talking about, in that if you if you go in there with a specific objective in mind, it's probably not going to be that pleasant for you in terms of the experience.
Right.
Whereas if you go in there and you just get good at the process and enjoy the process and you don't worry about the outcome, it's probably going to be a much more pleasant experience.
Okay. On behalf of everyone here today, Simon, I just want to thank you so much for your time, providing us with such in-depth, insightful answers to our questions. We really appreciate you coming to talk to us. I know there's a time difference as well, and wish you all the best with the launch of your book, your brand. If anyone's interested in learning more about Simon, his trading techniques, and his book, head over to, I think it's the towertrading.com, right?
Yeah, taoftrading.com. That's right.
And make sure
Or
you have
look
a
me up
copy
on
of the book.
LinkedIn as well.
For sure. Look, thanks again, Simon, and to all of you for listening today. I hope you enjoyed, and I'm looking forward to seeing you soon for another Keynote event. So thank you.
Thanks, David. It's been a pleasure.
Thanks, Simon.
Thank
Cheers.
you.
Bye-bye.